Hey, what's up, everybody? Welcome to Ask Me Anything Happy Hour with the Money Multiplier, Money Mentor expert team. We're here to answer all your questions. Get those questions going in the chat box. We will do a quick around the horn of who is who, and we'll get that started in 14 seconds. Be right back. All right, welcome to Ask Me Anything, our weekly show every Wednesday, 4:30 p.m. Eastern, where we answer all your questions about the infinite banking concept, becoming your own banker, real estate investing, and really whatever else you want to ask about. So get those questions over in the chat box, the comment box, and we'll start hitting those. My name's Stephen Nagy, the ringleader of some of these fools on this call. My money mentors, my family, the best in the business. And we like to have fun. That's why you hear me yelling sometimes and making jokes, because we do like to have fun. But I've always been a big fan of business and pleasure being combined. And if you live every day like you're on vacation, then does it really work? I don't know. You tell me. But that's the way I try to live my life. So with that being said, I'll pass it over to the one and only Miss Shauna Decker. What's up, Shauna?
Hi, everyone. I'm just hanging in here. I don't know, just happy to be here. It was good to have off for the holiday, and then my daughter's birthday was on Sunday, so it was just a nice long weekend, and I missed you guys and happy to be here. That's it. That's it for me.
Happy birthday. Cha-cha-cha to Harper.
Hey everybody, Brian Fouts here up in the Pacific Northwest. It was 108 yesterday, so it was a good day to go out and play in the sun. It was very hot here. Yeah. It's already about 100 degrees, I think, today so far. So we're all roasting pretty good here. So I think we're going to be going into some water this weekend, actually maybe tomorrow with my youngest. So going to go have some fun. And as Steven just said, every day is a vacation day, right? So going to try out and go do that while having some very productive phone calls. So with that, down to Linus.
Hey, I'm here. Linus from Hopkinsville, Kentucky. I'm digging in. I'm sticking it out. I'm doing the hard work. It seems like nothing It seems like right now I can't get much done fast, but Craig told me that, hey, sometimes that's the best way. And I think that's true. I mean, I try to do everything right the first time, and you can't go too hurriedly when you're doing that. But that's really all that's on my mind right now. I'm going to hand it right off to him. Mr. Craig.
All right. Hey, Linus, thanks for the intro. And Craig Yenny, just south of Denver, Colorado, and like everybody else, we're just now starting to get some of that heat wave, so I'm just going to be staying inside for a while. But we're talking about some triple digits out here, which is not what we typically get. So looking forward to when Joe Biden gets the climate fixed. So that's going to be exciting. He said he's going to fix it, so I'm taking him at his word. But hey, other than that, just looking forward to the questions. So let's get them rolling in the comments. And I'm going to pass the ball over to Gabe.
Thanks, Craig. Hi, everyone. My name is Gabe. I live in Newmarket, Maryland. I own a jiu-jitsu school here in Newmarket, and I was able to kind of start this all off by using my IBC policy, and I've been with the Money Multiplier since 2019 as a client and as a mentor. So I'll pass it off to Jason, who I know you're a black belt too, right? In Taekwondo?
I am. That's awesome that you have a school. You're helping so many families and kids develop discipline. And let's go there. So it's hot in the country, and I just got out of a 39-degree cold plunge for like 5.5 minutes just to reset my mind before being here with all of you. But it's just because I said I was going to do it, and so I did it. So I invite you as we go through our questions, as we go through the different scenarios today. Let's practice on what makes us hungry and what do we have to do to get to where we want to go, which is freedom. So happy to be here.
So far, we don't have any yet, guys. So we can get into some. I know that I think Jason and Brian, you both might have like a client question.
Mine was answered by Steven, but I'll run it through really quick. So working with a pair of real estate investors who have an LLC, right? And they're both young guys. They both are wanting to insure themselves for multiple purposes, and one is to protect the business. So being an LLC, the easiest way And the simplest way is to do it as individuals and then name each other as beneficiaries. But as they're going through, they named each other business partners. And so now we're going down the, like, is COLI a better route, right? And now COLI is an option, but it also is more intensive. There's more pieces involved, and it's not necessarily why they're starting it. It's just a piece of it. So just, that's not really so much a question as what is the right way to do it, going through underwriting the best way. So.
Yeah, I mean, I know Craig responded on there to that, Jason. You know, at the end of the day, it boils down to what their actual goals are. Like, is it more, you know, COLI policies are used for multiple different reasons. You know, one of those being to protect the other in case one passes, you know, to keep the company going. But for a lot of real estate investors, a lot of times they use LLCs just for legal reasons and tax purposes and things of that nature. And it sounds like from your conversation with them, it probably makes more sense to have the individual policies with just agreement among themselves that the other will be the beneficiary, because it's not a big complex company. They might not want the expense of having attorneys involved, things of that nature. And they're not necessarily protecting the LLC, like wanting that to go on forever. It's more just the other one taking, you know, not having a bunch of debts if something was to happen. And so, you know, it really could go probably either way, but it just seems like for the simplicity and just knowing a lot of investors in that situation, it just seems like individual policies would probably work great for them, but ultimately it's just up to their situation. I mean, Craig can expand on a little bit what COLI would look like.
I think it's an interesting conversation because we have a lot of investors that come in, right? There's a lot of different ways to do this. So what is going to be the most effective? The way that I went through with them and what they wanted to do was to do it individually because of the pros and the cons and the time and the people involved and all the different things, which I'll hear what Craig's going to add to this in a second. But then what happened is when they named each other business partners, the underwriting came back and said, hey, wait a minute. You know, is this, you know, a buy sell or a cross purchase? Like what is it we're trying to accomplish? So that's really getting clarity on that.
Yeah, and I guess I would just add to the whole discussion of, you know, if there's two partners in a business in an LLC, and if they're trying to protect against the death of one of the partners, where maybe they have to buy out the family because they have assets, or like Stephen mentioned, for debt obligations, it is really critical to have the agreements in place too. So the policies are part of the puzzle, but if you don't have the agreements, the attorneys write up an agreement, I mean, where's the teeth in it? So it's a small cost for getting this done correctly. So here would be my concern. They get the policies, one of them passes away, there's no legal documentation. There could be arguments and fights about what's the business worth. The other family has to, you know, come up with X amount, you know, money to buy the other family out. So from my perspective, if I'm in those shoes, I would want to have some clarity in a buy-sell document using the policies as the funding mechanism to protect them. Now, as you mentioned, Jason, I mean, they could do a cross purchase, which means, let's say you and I, Jason, are in a business together. I would buy a policy on you. I would be the beneficiary. I pay for it. And then you would do the same for me. And then we would have an agreement saying if you were to die, I'm going to essentially pay your family X amount for your share of the business, right? Now, the other thing that can happen is it could be an entity purchase where the company actually buys the policy on you and me. The company pays for it. The company's the beneficiary. So in one of our deaths, then the company would just pay out the family. So I guess I would just stress in this case, just really understand what they're trying to accomplish. Because if they're trying to do personal stuff and business stuff with it, it may be more meaningful to actually create different policies.
Well, that's eventually where it's going, is to do something more like the cross, you know, either the cross purchase or the buy sell or something else to protect. This first one is to get them going to do some of the investments they're doing, to do some other things, lend the money back to the business, different things. But they also had the caveat like, hey, well, if they're both like 24 or 25 years old too. So unless something crazy happens, it's probably not the scenario, but this is one of the concerns, right? So and I guess the best way to share all this for everyone watching and listening it really is for your mentor and yourself to have. It's like anything in life. The more clear you are on what you want, the more likely you're going to make the decisions that are going to support that outcome. Right. So it's really helping get that clarity for what they want to have happen. And same with you when you're thinking about what's most important. So,
yeah. And to that point, I think part of the strategy is always thinking about what are they trying to accomplish ultimately, and then how much resource do they have to fund this? And Chris and I were working on an opportunity where they wanted to have X amount of protection, but they didn't have the full amount to do like a whole life policy. So what we did is we set up a whole life policy and then added a term policy along with it that they can convert over time. So if you have a convertible piece of term, they've got that secured, and then maybe in 5 years they convert some more of that to whole life, and then 5 years later they convert some more to whole life. So there can be some unique strategies where we do whole life and term to cover the whole strategy of what they're trying to do to protect the company if they don't have all the money to go into whole life. So
love it, Craig. Thank you. Always learning, taking notes.
All right, we do have a couple questions in here.
See that? We bought lots of time for you guys.
Thanks, guys.
I saw Snaggy was about to fall out of his chair.
No, I told him he's got this question coming. King Arthur is asking, how much is PMC a year cost?
$1 million.
You have to do a little. There you go. I had a question yesterday too, Snaggy. So this is a good one to hit on. I believe she's here watching. So
yeah, cool. So Private Money Club, PMC, community of lenders and borrowers in the real estate investment world, and it's become a really great resource for people starting their own banks, controlling their money to find deals to private lend on, just like a bank does, and generate 10, 12, 15, 18 plus % returns on their money secured by a hard asset in real estate. And it's just become a great community at the end of the day. So good people in there and great conversations being had in the forum. And so there is a free membership. You can join as a free member and participate on the forum and browse through and whatnot. There's a premier membership. The premier membership will get you access to like the deals section and direct messaging and a bunch of education and training in our 2-hour mastermind we do every single month on the third Thursday at 6 p.m. Eastern. And so it's kind of up to you. The premier membership is $1,500 a year. I will say though, we also offer education. So if you are interested in, getting into real estate investing and want to learn how to borrow money the proper way and present to lenders and stuff like that, if you're on the lending side and you want to make sure you're using the right documents and protecting yourself and asking the right questions and negotiating properly and communicating and the rest of it, with coaching and education around all of that as well. So really what I'd recommend is schedule a call with my success team, and they'll work with you, what's right for you as a premier membership. Do you need some education? And then we have discounts. So it's $1,500 a year for a premier membership, but we have discounts available. If you bundle it with some of the education, we have what we call the Money Tank, which is our in-person live event coming up in November out in Charlotte, North Carolina. So lots of stuff happening with Private Money Club. So probably best just to schedule a call there. They'll hook you up with a discount, and I'll put the link over in the chat box right now.
So to kind of expand on that, so I went out to the mailbox in between our last meeting and this, grabbed a protein shake and the mail, and I got this thank you card from one of the people that's borrowing money from me in the Private Money Club. So it's just kind of cool. It's like, wow, it's really neat. But anyway, it's a really cool community, awesome people. So I don't know, when you think about what the cost is, it's like you can make so much money and build great relationships and get thank you cards.
Yeah, it's pretty cool. I mean, the membership and the education at the end of the day, because I always have a lot of people that are like, well, I only have $20,000 to invest. Like, is it worth it to buy a membership? Like, first off, the education alone and the monthly calls that we do are worth way more than that. It's not just about the return, but you're right, Craig. Once you're in and do all the deals, I mean, Private Money Club doesn't get in the middle of any, and we don't take points. We don't charge brokerage fees. We don't get involved at all. So once you're a member, you could run millions of dollars through there and make hundreds of thousands of dollars a year, which I know people are doing inside Private Money Club. and it's just the $1,500 membership. So it's pretty cool.
It's got a follow-up question real quick is how many members are there in PMC presently?
Yeah, it's a good question. There's several thousand, probably about 5,000 free members and probably 500-600 paid members within PMC currently, several hundred active members. And it's a pretty good balance of lenders and borrowers, I would say. We go back and forth. Like for a while, for a few months, we'll have more money than deals. Everybody's like, hey, we need more deals. And then for a few months, we'll have a bunch of deals and they slowly start going. And it kind of goes back and forth. We're at a pretty good balance right now, though.
One more question as well from King Arthur, and then I'm going to get to somebody else. Have any of us used the forklift company?
Used it? I'm going to drive one next week.
I have personally flipped 2 forklifts. I did them last year. My first one was 3-month time frame. My second one was 5.5. I know Craig has a longer, unfortunate, almost going on like a year or so before his selling. So it varies.
Yeah, so it kind of depends on seasons and the model you have. So I must have something kind of rare. It's taking a little longer, but the nice thing about it is after 6 months, you can ask for your money back if you want. So I'm
no one wants a polka dot forklift, Craig. I don't know why you insisted that they paint it that way.
Well, it climbs hills.
You want a yellow one, man. Why'd you have to make it weird? I don't know.
Well, the polka dot one climbs up hills really well, and you're probably the only one's going to get that joke.
I did flip 2, just for the record. I do. One of my business partners has done 26 now. Just to give you some.
26 flips. Wow.
There you go, Craig. That's why yours polka dot one has not sold.
Maybe. He's done 26 over the last year. All right.
I'm going to move on. So
I'll put the link for that too in here just so everybody wants to see it.
Thanks. So Dexter's saying, example, I have had a bad physical first round, let's say stage or level 4. A year later, you can prove better health. Can you go back and get a better health rating? If so, will this make the policy more efficient?
Yeah, that's possible. I'm not sure what you're meaning when you say stage 4, level 4, Dexter, whether that's the health rating on the policy or something else. But yeah, if your doctor can prove that better health and you're sure, underwriting can take a look at it and see if something can be changed like that.
Yeah, so I have a client doing that right now. They had a rating or whatever, and they stopped the process and said, hey, I got something going on. They took care of it. Now they're coming back and doing it and getting a better rating now. But their policy never went into effect, and they never got 100% through underwriting, though.
Okay. No, this can be done after a policy is in force as well, if there is a table rating.
How far after? Like I don't know, like let's say you have a policy 3 years old. Can you go back and do anything to that or no?
I don't know. Does anybody here know? I think Hannah would know.
I believe so. I believe you can do it. Anytime you can go back and show medically that things have improved, I believe that they will improve the rating. That's why I've been told numerous times.
Yeah, you can challenge ratings. Yeah.
So I believe that's true.
So Dexter, maybe you should challenge that rating, tell us, and then we will be able to share that answer from your experience.
And that's enough. And Dexter, I'm glad you brought up. You're always around the campfire. You're participating. Like this is something. We're all learning something new every day. Like, what is a time frame? I don't know. I've been told it's a year or 2 years to go back and change from like smoker to non-smoker or a health rating due to something else. As long as you can support it medically with like a doctor note or some kind of follow-up, I've been told that they will change your rating, which will make the policy more efficient from that point, right? Like it'll just perform differently because there'll be less risk. So.
If I had to guess, I would guess that it probably that would coincide with that contestability period of 2 years. Just thinking about it, I'm thinking I would be surprised if you can do it any further than that 2 years out.
So I think it was in one of the what was the show? One of the old police shows where he said, go out and learn things. So Dexter, go learn things and come back here and let us know what you've learned. So we'll learn too, but maybe you'll find out first.
Love it. J10, hey Jay. Hi, is the first year premium the most you can deposit per year for the life of the policy? Can you go beyond that amount?
Depending on the, go ahead, Linus.
Yeah, so typically not, but depending on what it is you're trying to do, what problem you're trying to solve or what goal you're trying to hit, there are some ways we can design them to be able to work it that way to actually have higher premium deposits in subsequent years. So it's just, yeah, it's really a matter of getting on a call with a money mentor and going through what it is you're dealing with or wanting to do.
Yeah. Like I had a client that had this exact same question and they wanted to put more in like the years 2, 3, 4. And so we allowed them to do what's called the dump in years 2, 3, 4 with one of the companies that we work with. But here's why they ended up not doing it. Because when we did that, what happened is the underwriting amount, which is like the total death amount they're qualifying you on, the death benefit, all of a sudden was very high. And if they did that and didn't put in the dump ins, they still have that high death benefit out there. And so they ended up not wanting to do it because they wanted to get other policies. And so they made a decision that says, oh, you know what? I won't do that. Then I'll do second policies and be able to get more policies instead. So
there is a way too. So yes to everything that was just said, but there is one of the 5 companies you can go back and you can put 10 times the base paid up additions in year 1. From 2 and on, you can put 3 times the base. So, oh, look at that. I guess celebration. Woohoo. So there are ways to go back without doing a dump in, without having more underwritten, to go back later and add more. I mean, that is what Nelson Nash is talking about in his Becoming Your Own Banker book, right? I can't give you the exact page or quote, but I know that that's in there, that you're looking to add as much paid up additions back into the policy as you can. So there are ways to do that. So
yeah, the other strategy, not that I would recommend it, but if you had a policy, say you got into year 4 and you wanted to put in more, which would require more term, you can go in and get approved for a higher term amount and increase that rider length or whatever you want to do, but you have to go through underwriting to get it. Then you can put more money in that policy. But kind of like Brian was saying, it might make sense at that point just to start a different policy. So it's really going to depend on what you're trying to do and how long you're trying to, achieve that specific goal.
Yeah. I've had a guy put an extra $24,000 into his policy in year 1, right? So there is, after it's enforced, go back and put more in. And he's got room to put more back into it. And it was designed super efficiently. It's just the rules, depending on the company with the PUAs, right? So,
yeah. The other reason why you might want to do that, though, too, is like, let's say you're at a certain age where you're getting a little bit older and you don't know if you're going to have the ability to put in more dump-ins or that kind of stuff down the road. You might build the policy to allow you in years 3, 4, 5, up to maybe year 7 to put in dump-ins because of you don't know if you can get approved for a policy in 5 years because of age and cost and other things. So I have had some people that are considering doing that kind of a policy just to leave the door open for down the road.
Craig, would you call that I wouldn't call it a dump in. Would you call that a dump in? Because I think when we talk about dump ins, we kind of confuse people sometimes. So just curious.
With Lafayette, as an example, the way they phrase it is a PUA or lump sum PUA, right? Right.
So year 1, they called it SPUA, and then years 2 and beyond, it would be called LPUA. You can, Linus and I were kind of playing around with this one day where you can actually do LPUA for the dump in, but it requires some reconfiguration of the illustration, but it's kind of getting into technical terms, but the dump in is an SPUA and it's required to be put all at once. It doesn't have to be at day 1, but if you do it 3 months later, it all has to go in at once. If you do LPUA, you can kind of sprinkle it in throughout the year. So there's some advantages to one versus the other.
Yeah.
Perfect. And then I put in the chat our mentors.be your own banker, to book a call with our team. And then right now I only see one other question, which is, what do you think about crypto?
I don't.
I don't know. That's so funny. Anyone?
I'll share my perspective. So I did a crypto course last year just because I wanted to learn more about it, put some money into crypto. It happened to go up, but I decided it's just not for me. It just, I don't know. I like real estate. I like those types of things. But there's people out there doing really well with crypto. I think what Chris talks about all the time is whatever you do, you should know, like, and understand. I don't like crypto. I don't know it, and I don't want to do it. So
I will dabble with a little bit. Like, I'll never go over, like, let's say $700 or something that I'm going to mess with, but I have messed with it. And I sold when it was up at 69, and now it's down to like 54 or whatever. So I sold at the right time. And all I know about it is buy when it's low.
Buy low, sell high. That's
Yeah.
Yeah, it's super risky. Here a few years ago, I had about 50% of my net worth in crypto, and now I have zero. Wow. So I've been there and back. I'll dabble with it in the future at some point, I'm sure, but it's not really for everybody. It's hardly for anybody, really, is my take.
But I would say that kind of runs true for pretty much anything. We talked about forklifts earlier, or private lending. If you don't know, if you're not experienced with it, I wouldn't do it until you are experienced with it. At least learn about it. Start small. But yeah, I don't know.
I was buying and selling crypto for a while, and then Florida legalized sports gambling, and the Hard Rock app came out, and now I've switched to that. So
it's like the same thing, right?
I prefer being entertained. I prefer being entertained when I gamble.
Yeah, Steven was pretty attached to some of his baseball picks when we were meeting for the first time. I thought that was pretty entertaining. So,
oh yeah, baby.
You won some money that day.
I did good on the Panthers Stanley Cup. Just put it that way.
I have to get off. Some of the students starting to get here, so I got to get ready for this class. But
we should just have
the rest of the call.
Students in the background. That'd be awesome.
Right.
Thanks for being here,
Gabe.
Bye, guys.
Thank you, Gabe. See you, man. All right. What else we got?
Let's see. I think the only one was when you say you have a money take event in the Carolinas, when and where? When you said Charlotte Motor Speedway.
So we're doing the Charlotte Motor Speedway. It's going to be September 8th and 9th. So put it on your November 8th and 9th. So put it on your calendar, and we will be sending out details hopefully in the next couple weeks. Just kind of finalizing it all now.
You can go to privatemoneyclub.com/moneytank, and it has the information there, Stephen. It's all updated. So
sick.
Mm-hmm. All right. D. Ryder is saying, can the same strategies be used in Canada?
Generally speaking, yeah.
Yeah. They can. They just have some different tax laws that you need to be aware of. But yeah, they can definitely be used.
For a minute there, I thought they were talking about hockey still. And Canada hasn't won a Stanley Cup in over 30 years. Sorry.
All right. We have to pour some salt in the wound.
But yeah, they can kind of do IBC in Canada. They're pretty good. So we have some partners up there. So if you want to reach out to us, we can definitely connect you. Just email one of us. If you don't have it, it's snagy at I don't know what email to give.
Yeah, so for some reason, only places where it's really warm win Stanley Cups lately, huh? It's kind of weird. So,
well, the last 5 years, it's been either Florida
Vegas
or Tampa.
Tampa.
Not winning it, but being in it, being in the Stanley Cup. I'm just playing D-Reader. Just email us. Though we'll connect you with. There's several companies in Canada that do IBC. There's 2 that are the best, and we work with both of them. So we'll connect you with the right one.
Well, I haven't done a dad joke lately, so I'll throw one out. So I went about a week ago. I went to an MMA fight, and a hockey event broke out. So pretty crazy.
Whoa.
I got buzzed.
Went over Linus's head.
All right,
You gotta
Henry.
learn all these for your daughters, man. They're gonna want to know these jokes. Here's one of Connor's favorite ones lately. So, lady gets on the bus with her baby, and the bus driver says, "Man, that is one ugly baby," and she's really mad. So she storms to the back of the bus, and she tells this other guy, "I can't believe the bus driver just insulted my baby." And he goes, "Ma'am, I'll hold your monkey if you want to go tell him off."
Oh. I'll crack one. I used to really hate my beard
all the time. Monkey.
I used to really hate my beard, but it kind of just grows on you.
There we go.
Oh my God, you guys are hilarious.
At least you didn't say I
For
love
trying.
you. For trying.
All right, Henry Lima is a millionaire crypto millionaire, and he's wondering if it's possible to dump a couple $1 million and retire from my job if I live off interest. I made a few million from crypto.
Sure.
Yeah, let it rip.
Live on interest off of what? The infinite banking?
Well, yes, there has to be an income to support the whatever you're putting into the policy and all that kind of stuff. But yeah, I mean, potentially, why not?
Well, let's see. Yeah. So Henry, this is the whole strategy we'd have to talk about. So let's get on a strategy call, talk through exactly what that looks like, what you're trying to accomplish. Probably a good structure, just spitballing here, would be to put as much as we can into policies. Let's start lending that money through something like Private Money Club, where you're generating monthly income at a good return. You're not touching the principal. It's protected in the policy and will generate whatever lifestyle you want to live. And if we need to incorporate some other financial strategies in there, we can definitely do that too. We can talk about that on a call. So I would say just schedule a call and let's talk through it. Fair enough?
Mm-hmm.
And thank you, Chris Ash. That was what I was thinking of. I could even hear the theme song from Big Head Todd. I just could not remember the name of the TV show. So,
yeah, Chris, Jason's great, man. We talk to him. I talk to Jason all the time. Good company up there.
Oh, thanks, Steven. I think you're great too.
Thank you.
Jason spells his name wrong though. He puts an extra letter in there. He's got a Y in there somewhere in the middle.
Oh, Low? Lowy? Low?
And then Millie's saying, are y'all live on YouTube or on a private Zoom? So right now we're on YouTube, but I think we've got 4 private Zooms that we do. And so I actually put a link tree together with all of our shows. So like Zooms, I point out which ones are Zooms and which ones are YouTube live streams. So I'll throw that in the chat for you. And for anybody who just wants the bookmark, our live appearances throughout the week. I guess, Jason, this might be for you. Matthew saying, if we are around the campfire, can we use the tagline "Money Jedi Apprentice"?
Yes, I love that. Yes, it's a battle. This is a battle of good and evil. We are fighting the evil empire. So yes, we are Jedis and Jedi apprentices, Padawans, etc. So yes,
that's
absolutely.
Great.
I haven't put Money Jedi in a while, so I appreciate that.
And then King Arthur saying, when the special design policy is up and running, how many years does it take for the compound?
Depends. It depends. If you're not overfunding it, it's usually year 4 or 5 where you're becoming efficient. You're hitting an efficiency point where every dollar you're putting in becomes more than $1. If you're overfunding, it can happen sooner. So it just depends on what you're doing. And every time I see King Arthur's name, I think of the movie where the dog in Ecuador follows the team across the country. So pretty cool movie.
And I guess I would add that the compounding actually starts right away.
Right away.
It's just more or less, it seems like there's more to the sentence of maybe when does it compound more than you put in, or so I'm not quite sure what was being asked here, but the compounding will start right away. But it's kind of like a little snowball that you put at the top of the hill, and then you go boink, and it starts rolling down the hill. and that snowball is just going to get bigger and bigger and bigger and bigger over time. So
you can tell the penny story, Craig, and just like use that as an example, right? So
go for it.
And so if you have what would you rather have, $1 million or a penny that doubles every day for 30 days? You know,
always the penny.
Always the penny.
What if I take? Wait, what's the first $1 million?
Well, if you said the penny, you'd be disappointed for the first 26 days, I believe it is.
Yeah.
Right. You get to day 26, you'll have about 650,000. Day 27, you have 1.3 million. So that's the power of compounding. If you think about that in terms of your lifetime, like it's going to pick up more and more and more momentum as it goes.
Steven wants the $1 million day one.
Yeah, why can't I just put the million into the same place that the penny is and let it double too?
Yeah.
Way more than all of you.
Because Jason's got about $10 million and he's doing an experiment with you.
Yes, that's it. Just illustrating 30 days over a lifetime. That's all. That was the whole point of the story.
I got a good question. These Zooms are fun and all, but when are we getting together in person again?
Uh,
I think in Nashville.
You guys coming to Nashville?
I could see you in Indianapolis first.
Oh yeah, that's September.
Yeah, for a symposium.
Indy 500.
Hopefully it's not called the IBS again, because that was a bad name.
Yeah, it's funny to me whenever somebody like the emails that come through who want IBC and then it says IBS. So I'm like, you silly.
You're like, really? You didn't think about this? Whoever's marketing this, come on, you kind of missed it. Or you have a really weird sense of humor. So.
Well, we don't have any questions right now, so you can keep talking about our upcoming events, Stephen.
Cool. Well, let me look at my schedule here. So next next weekend's all sold out though, right? I can't talk about that.
I could technically take one more. If I could make room for one more.
If anybody wants to come to Buffalo next week, then that's going to be a fun trip where it's going to be a bunch of people will be there, right? And then
we got about 30 of us.
And then we're going to drive Forklifts and we're going to ride a jet boat around Niagara Falls. And
cool.
I rented a Suburban to cruise the strip in, bumping music. And we're going to a baseball game. And we're going to eat. Joe told me we're going to eat 25-cent wings.
Oh my God! They don't make 25 cents wings anymore.
Wait, do you guys do Nick Tahoe in Buffalo too, or is that only in Rochester?
No, they were Buffalo wings. Buffalo, dude. They're made in Buffalo.
Yeah, but they're like at $2 a piece in this economy. They're the 25-cent wing.
Dude, you know Joe. You know he knows where all the 10-cent places are. Come on, look at Joe. Joe. All right. So we're going.
I will say
you're definitely going
to leave chunkier because all the food we're going to eat is not that healthy.
Yes. Anyways, so if anybody wants to join that, let us know. And then just email Sean at sean@chrisnoggle.com. And then what else? Those are all virtual events in August, though, right?
Yeah, and real quick, the cost on that one event is $3,500. It covers pretty much everything except for you getting here, and then you have to get a hotel. But we've got a couple of Suburbans, and Steven can come pick you up, drive you around.
That's going to be worth a ride right there. Right? Yeah.
But that's the joy of it. Like, we'll be in cars together. It's actually really awesome.
All right. After that is not until October. So we got October Money Multiplier Mastermind in Nashville, Tennessee, October 10th, 11th, and 12th. So we got general admission ticket and a VIP. Actually, I don't know if I was supposed to do this, but we were running a sale. We were running a 4th of July sale for this. 30% off either ticket, general admission or VIP. And I just heard today that the discount still works. So if you want to buy a ticket and meet us in Nashville, are you guys all going to Nashville? All of you on here?
I am. I've never been. I'm really excited.
Currently scheduled to go.
All right, we got to get there. I think most everybody else is going. And so the discount is freedom and in capital letters. I'll put it in there. So use that while you can, because I don't know how many more days that'll be good.
And I know that Hannah said on our company meeting that it's already about like 60% capacity, so it will probably sell out in the next probably, I don't know, 30 days or so.
220 tickets being sold. We're 60% sold out. It's not till October, so it'll definitely sell out. We do draw a real high-end clientele too, so you're going to be around a lot of very successful people. There'll be a lot of money in the room. A lot of partnerships come out of these things, and they're just a lot of fun. And guess who gets to MC it? Yours truly. So be ready to be entertained, baby, because we're going to have some fun.
I'm really excited.
Okay. What else we got?
Well, also not to get too far ahead of ourselves, but if you're thinking about, if you're a person who cares about snow sports, like some of us do, in February is our next experience mastermind, February 7th through the 9th, and it's at Sundance, Utah. Sundance
Really?
Mountain Resort. Yep.
Do I know about this? February 7th to 9th?
Yeah, 7th, 8th, and 9th.
You're right down.
And so you could ski, snowboard, snowshoe, all sorts of fun snow stuff there.
Super cool.
So thinking ahead. And there are payment plans too, if it being so far in advance kind of helps you get those payment plans to pay for that. You can always email me about that. So Shauna@chrisnoggle.com. It's also, my birthday's February 11th, so it will be like almost like my birthday treat. And all right, let's see. We got 2 questions. We're
Num
back.
num. Num num num.
So King Arthur's going back to that question about compounding is how many years does it take for the compound interest to show up?
Takes one day. It does. It compounds daily. So
Yeah, it compounds daily, which is also why sometimes, like my first question when I got my first policy was asking like, what's better, monthly or annually? And if you do the annually, your money's compounding from day one. If you do monthly, it's as you add money, that's when it starts compounding. Thanks, guys. I guess I said that right.
You nailed it. You nailed it.
And I'm just going to assume that this is part of what King Arthur's asking is there's kind of 2 different measurements we look at in terms of the efficiency of the policies, which when you look at long-term, it doesn't really matter. But one of the things we look at is the cumulative, meaning when you put X amount of dollars into the premium, when does your cash value exceed that? So in first year, you're not going to have every dollar back that you put in, but as it starts compounding, eventually the compounding is going to exceed and keep getting bigger and bigger over what you put in. And like Jason said, that depends on how it's designed. That could be year 4, that could be year 5, that could be year 6, could be year 7. And sometimes just based on the design, we can drive that earlier or later, but there's trade-offs with everything in life. Typically, the sooner you get the cash value, the higher the cash value, and the sooner you get it, there's usually a longer term impact, meaning if I had one policy that was squeezing out as much cash as I could up front versus one that was more moderate, well, the one more moderate at year 15 and 20 is going to grow more than the one that we squeezed the cash out of. So just know there's kind of like a teeter-totter of trade-offs, but it really depends on what you're trying to do with the policy. So we can drive those up and down based on the design.
And with the uninterrupted compounding interest and it being daily, for an example, I took out a loan, like a max value loan, out of my policy on the 10th of June. So exactly a month ago, I was logged in to check. The available loan balance today is $272.51. I haven't put a cent into it, haven't done anything, but that's how much the policy has grown at the guaranteed rate since I took out a loan a month ago.
Beautiful. And then real quick, Jimmy Davidson is saying, besides me, Shauna, any of you will be in Buffalo in a couple of weeks.
Snaggy's driving Suburban.
Yep. Steven will be there. Tess will be there. Who else will be there?
Joe.
Yep, Joe. Keylock Joe will be there.
Is Chris going to be there? Just kidding.
Yeah, Chris will be there. I'm trying to think of who else.
Yes, I heard Jimmy's coming. That's going to be awesome.
Actually, Devin is coming up on that Monday and Tuesday after the event. He can't make the event, but if anybody stays longer, I don't know that you would, but all right. All right, so Dexter is saying I have $1,000 per month premium, which I took out to make my car payment at $500 monthly. At this point, I'm getting $820 per month back. When I'm done paying off the car, I'll still. Okay, hold on. I can't understand you, Dexter. I love you. Okay, my question is, since I'm borrowing every month and paying interest back to myself, if I do the same process but don't borrow the money, just do the deposits, is the benefit paying the interest? Like, which is the benefit? Make it grow quicker. Okay, so he's paying his car. I don't know if Craig, like, what happens when your car's paid off, right? Like, you know, like we talk about a major purchase.
Yeah.
Putting money in monthly, out monthly, you're paying it back, and then at some point that car's paid off.
The two things that are going to make the policy grow more. So just simply taking a loan and paying the loan back doesn't really change the growth of the policy. But let's say that you were going to pay a car dealership a 7% interest rate and your policy is at 5%, but you intend on being an honest banker and paying that full 7% back to yourself, then at some point you're going to have the loan in the policy paid off in full. The rest of that money goes into the premium, into PUAs. That will create more cash value, more death benefit. So anytime we're putting money into the premium side, that's going to cause the policy to grow more in terms of cash value and death benefit.
I have a follow-up question to that, Craig. So when you're paying back the loans, right, like you have an outstanding loan, you're paying back the loans, are you able to put additional PUAs in before you pay off the loan, or do you have to pay off the loan first?
No, you can definitely put PUAs in before paying the loan.
So you can keep increasing the efficiency, the growth of the policy in a non-direct company in that manner. So,
So what you're really talking about is you have the ultimate flexibility on how you want to pay your system back, whether you want it all going back into the loans or you want some of it going into premiums.
I just learned this light bulb. Like, we're talking about the wealthy have more choices all the time. I must say that 20 times a day, right? Do the wealthy have more choices, or do you believe they have more choices? And you just opened another avenue for more choices. Not only can you choose how you pay it, the premium deposit every year, right? Not only can you choose how you pay your loans back, structured, unstructured, or just the interest. Now you can actually, decide, do you want to pay back the loan and add more additional PUA to get more growth? Yeah, all these things you can do. And there's more than that, but there's a couple quick ones. More choices. Sounds like freedom to me.
Freedom.
Yes. Or boom, as Dexter's saying. All right, King Arthur is saying, when getting a policy started, what dictates the policy face amount?
If you're left-handed or right-handed, really, that's really the biggest determinant of all those things. So. No, that's not it. Oh, man.
Linus, do you want to run with that one?
Yeah, age, premiums, all this stuff.
Hey, I don't really have a good answer for you because it is going to depend on the policy design, and all of that depends on the strategy that you figured out, like working with your money mentor. And so some will be higher, some will be lower, but it mostly depends on what amount of premium you're putting in. You're putting in a small amount of premium, you're going to have a smaller death benefit face amount, as you call it. And larger premiums are just going to generate a larger death benefit.
Age makes a big difference too.
Some, yes.
Sex.
Health rating, the whole bit, yeah. But so I guess, King Arthur, if you're trying to get to a certain death benefit number, most times we're designing around the cash side of the equation because we're using these for banking purposes. But life insurance also serves that purpose of death benefit and protection. So if you want to do both of those, you could say, hey, I'm looking to get about X amount of death benefit, and I'm thinking about putting this much into the policy. I mean, those are design considerations we can take under consideration to try to get as close to that amount as possible.
And so with that question being legacy, it's a legacy question. We're always, at least personally, I'm always surprised when I see the death benefits and what they're going to be for someone. So like if they're saying, hey, I want to make sure I have this much legacy piece, we can design around that as well. And someone mentioned, I think it was maybe Brian, but yeah, women are superior. They always get, the policies are always more efficient. Their death benefits are always higher. I mean, we already know they're way superior to us. I mean, you just have to admit it and know that is true. But when it comes to life insurance, which is the most profitable industry and most profitable companies in our country, they just write it that way because that's how it goes. I'm a little bitter. My wife's policy is actually less rated than mine, but more efficient than mine. So,
well, if you look at
I'm older.
But if you look at mortality tables, women always have a better mortality rating than men, and I'm going to admit I'm part of the problem because I'm the kind of guy that will take a 22-foot ladder, put it up on the tree, stand on the top rung with a chainsaw trying to reach that dead branch.
I see it in my mind.
That's why we have higher insurance. I'm sorry.
Yeah. So Craig, you're just saying we're not that smart, and that is true. It is true.
And then
I can definitely agree that men should have higher cost of death benefit.
Yeah. I wouldn't say that it's that we're not as smart, but maybe we think we're smarter than we truly are.
Yeah.
There's all kinds of studies. You talk to one of the guys in the Money Multiplier he's ex special forces, right? And he was talking about, he was a pilot, but like in scenarios where like the way that we're hardwired, this is really interesting, right? The way we're hardwired, like when men go in to fight and do things, we get absolute tunnel vision. It's the same thing as like why men can't find things. Like when you misplace something, Shauna knows like where is my, whatever, and it's right in front of them. We get tunnel vision where women in that hectic moment, because of just the hardwiring from back, in the caveman days, they see more. Like your vision doesn't tunnel. Like so there's all these differences between us. So
love it.
And you live longer.
We're gonna end on this one question. So Dan Sims is saying, if you have your own business, would you rather do a 529 for a child or have that same amount be a small wage? What do you think is better use of the funds?
Do what you want to do, but I know what I'm going to do and not going to do.
Yeah,
I'm definitely not going to do a 529. I'd rather be paying my kids a small wage and probably running it through a policy and then have it fund their toys and things that they might want, or eventually their vehicle, all that sort of stuff.
I do the same thing.
And it depends on where you live. They keep changing. Like every time the government creates, a solution for a problem, and then they'll create a new solution. Now, like you can use 529s for middle school, for private education and things. A lot of them you can. I know in Florida, I mean, we have a 529 and I have a policy for my son, right? For the things that he's going to want to do, cars, extra college funds, things like that, because Florida's prepaid plan, it's not a 529, but prepaid plan is not that expensive, and it'll pay for any state school. So like the costs going up and up and up, like it's almost like, how do they figure that out? I don't know, but that, like, I would just know like what the plan was, where you live and stuff too. So I want to say policy 100% because of the flexibility, but then in Florida, I think it makes sense to have a Florida prepaid too.
I like how Lena said it. Do what you want, but we're probably all leaning more on the pay them a wage and run it through a policy.
Yeah, because my oldest didn't go to college. I don't see who asked the question anymore. But my oldest didn't go to college, and we had the plan set up for him, right? And so when we wanted, like, the only option was to either transfer to my younger son, who is 11 years younger, and you only have 10 years to use it. So I'm like, well, he's not Doogie Howser, right? Like he was like 5 at that point. Like we're not gonna be able to, send him to college already. And so we just took the money, right? And it didn't grow. There was no tax benefit from having it there, and actually went into our first policy. Like that's how we used it for the family. So
cool. That's it, guys. You all are amazing.
Cool deal. Well, hey, I'd like to share something here at the tail end yet. So here a little while back, I was a podcast guest for the first time. So you can go see my pretty face talking on YouTube. The channel is called JCW Durham. It's Durham Talents, I believe. And so we kind of went through my story of how and where and why I was introduced to infinite banking and what it has done for me so far.
That's awesome.
Nice.
I'll definitely find that.
Yeah, thank you for sharing. We'll do an interview sometime on founding fathers. We'll have that whole story out again. So that'll be fun too. We'll get this story out there more because it needs to be told.
Sure.
Glad I got an invite to founding fathers, but
Some other time. Yeah, some other time, Hey, I thought you didn't even bring me on to talk about the news I don't know about today. What's up with that? So
I know I missed the text message. I will say that Drew sent me one that I had planned on sharing, and I completely forgot because I got confused when Chris wasn't there. But I'll go ahead and wonder if I can share this right now.
Yo, hold on. I sent you one thing. It was just it was a picture that I saw. But Danica Patrick apparently lost a contract for talking about lizard people in a podcast. She got fired for something, and that was something I sent you for one of those headline things. I just thought that was crazy.
This one right here, Drew sent this. I guess. So the story is New York City paid McKinsey $4 million to do research on if trash cans are a good idea to use in New York City. And so I actually watched the news conference and Mayor Adams was out there literally we have this huge announcement, and he goes, we're going to fix the trash problem. And he rolls out a trash can. He takes an empty bag and puts it in. We're good. I was like, there's no way this is real life, but it happened this week. And so the news gets dumber and dumber and dumber. If you don't join us every Wednesday at 9:30 a.m. Eastern for What the F Happened. And that's the kind of news we bring you. I think it's crazier every day. I think this matrix is real. That being said, I don't know. Any final words, guys? Thanks for being here, everybody.
I'm just going to put that link tree in again with all of our live schedules. Go for it.
All right. We'll see you guys soon.
Woohoo.
Thanks. Bye.